Yes. What's going on, family? What is up? Welcome to tonight's stream with your boy Abel, family. If you guys can hear me, loud and clear, let me know by dropping your locations in the Chizzy chat. Let me know that you guys are tuning in with me, fam. Let me know that you guys can hear me. Drop your locations. Because we're going to have another phenomenal stream. And I'm really going to get into some value tonight, family. Because we're going to talk a little bit about quantitative tightening versus quantitative easing. And I'm pretty sure that's probably something that a lot of you guys never even heard of. No offense. But it's definitely something that we all need to be aware of. Okay? Because that's exactly what the Federal Reserve has started doing yesterday. They actually started going through the process of quantitative tightening. And that's going to affect these financial markets moving forward. So we have to be aware of these things, guys. But let's see who we got in the building today. Let me see who we got. Let's see who my family members, where my family members at. Right, shout out to my family in the building today. Right, let's see. I see we got Orlando, Florida in the building, Alabama, Baltimore, the 410. Shout out to everybody out there in Baltimore. Y'all know Baltimore Ravens is my favorite football team. So I got nothing but love for everybody out there in Baltimore. Shout out to you guys. We got Baltimore, Big Bert in the building. What's going on, Bert? Good to see you. We got LA in the house. We got ATL on the check-in. The Bahamas in the building. We got Philly, PA in the building. Let's see what else. We got the guy Andrew Jackson. What's going on, Andrew? Good to see you. We got Belgium in the house. Muhammad, good to see you. We got Cali, Riverside. I see y'all. What is going on, family? Let's see who else we got in the building today. We got Trinidad and Tobago. We got Barbados. We got Florida in the building. What's going on, Spence? Trinidad and Tobago is deep today. Appreciate every single one of y'all for checking in tonight, guys, because we're going to have, again, another phenomenal stream today, where we're really going to get into a lot of value that I personally feel like is extremely important, especially if you want to do trading Forex, right? If you aspire to be a Forex trader and you want to be if you want to be able to do this, guys, for a long period of time, consistently and profitably for a long period of time, then there's a lot of things that you truly have to understand. All right, and I'm going to try to go ahead and today at least explain certain things to the best of my ability and in the most simplest way possible, so that you guys do understand exactly what is going on in this world. Okay, so let's see where else we got in the building. I see we got Jacksonville, North Carolina. We got Puerto Rico in the house. Shout out to you, Christopher. I appreciate you, right, for tuning in as well. Super excited to be here with every single one of you guys. Right, we got the boy Skaggs in the building, the young legend, young lion. What's going on to my guys, Skaggs family? Like I say every single stream, if you guys also want more value similar to what I teach, or even possibly going even more in depth in what I teach, go ahead and give a follow, right? Like literally look at the blue names in the chat with the actual toolbar, my moderators, because they're also experienced traders that are there to provide you guys with massive value, right? So people like Skag Academy, type in that actual YouTube account in YouTube and make sure to give him a subscribe, right? Because he's literally going live as well, and he's honestly one of my mentors, okay? So if you guys like the value that I'm giving you guys, then you're absolutely going to enjoy the value that Skaz gives you guys as well. Now there's also the young legend, right? Mr. Kyle Hustles as well, who's probably going to end up jumping into the chat. Another one of my moderators. That, again, another one that's also going live, guys, every single week to provide you guys with more value on top of what I'm providing you guys. So, again, make sure to be subscribed to them, family, if you want to continue gaining a lot more value outside of what I'm already giving you guys. All right, so I see we got Namibia in the building. Shout out to you guys out there in Namibia. We got St. Louis, Dallas, Texas, Boston in the house, right? I know for a fact you're watching the finals right now. I was actually just watching it, and I actually just turned it off. Why? Because this is more important than watching people that are already rich playing basketball, right? Trust me, I love sports. I'm a massive sports fanatic, right? I'm actually, a big fan of Golden State. I'm a big fan of Steph Curry more than anything, just because of how legendary he is. But when it's time to put in the work, when it's time to focus on you guys, everything gets shut off, right? So I turned the TV off, and my focus is with every single one of y'all that's on the call, family. So I see we got Louisiana in the building as well. We got DJ Anderson in the building. What's going on, DJ? I see you. We got East St. Louis in the check-in. Youngstown, Ohio. What is going on, family? Once again, I appreciate every single one of you guys that is on the check-in with me today. So let's get right into what we got to talk about tonight, family, because we do have a lot of information to really go over today, especially regarding a lot of fundamental talk. All right, we're going to really get a lot more in depth, guys, on a lot of fundamental analysis that we have been seeing occurring over the past, stuff that we just need to know, period, right? We're also going to look at a bunch of the setups, guys, that we actually talked about yesterday. I actually took two trades over the past day. You know, EURUSD long opportunity, which, no, it was the EURUSD shorting opportunity, actually, that I got completely stopped out on. I took an L on that one. But then I also looked at a GJ opportunity, a pound yen opportunity, guys, that I actually ended up buying, and that one actually played out really, really well for me, right? So overall for the day, I'm 1-1, but since I know how to utilize risk to reward, I'm actually positive for the day, and that's just, you know, ultimately what I'm truly after. So we're going to get into that stuff as well, see what the markets have been doing, so that we are all prepared, family. So just so we confirm that everything is good to go ahead and drop a 7 in the chat if you guys are with me tonight. Right, drop a 7 in the chat, guys, if you guys are with me tonight, if you guys can hear me. Right, drop a 7 in the chat if you guys are with me and if you guys can hear me. Right, just so that we make sure that we are good to go. So that we can really go ahead and get into the sauce and get into the value. Because Mr. Sauce is here. And Mr. Sauce is about to go in and provide you guys with massive value. Right, let's see. Also took EU, didn't take GJ Doe. Yeah, we're going to talk about both of those. Right, we're going to talk about both of those, you know, just so that we have clarity. Right, again, one thing about me, family, is no matter what happens in a trade, right, whether we actually win on a trade or whether we lose on a trade, I'm going to come back the next day and provide you guys with insight as to what went right, what went wrong, if there was something we could have did to actually, you know, adjust our biases or adjust our positioning, you know, but ultimately it's more so just a learning thing, right? It's more so about, instead of taking losses, you know, we're here to take lessons, right? Because every L that you take is not necessarily a loss unless you decide to not learn from it, right? Make sure you guys understand that. Every single loss that I take, guys, I always reanalyze to see what went right or what went wrong, right? And then there's also going to be times, family, where I just took a good loss, right? Where the setup there was good, it looked good in my opinion, and the market just got me, right? That's the biggest thing about trading, family. You have to be okay with accepting losses, right? What did I say last week about you taking losses, right? We have to be a professional at taking losses and understand how to really, you know, react and manage ourselves when we do take losses, guys, right? So I said that today, right? We have to be professional loss takers. Who remembers when I said that? Right? Because we're going to talk about that heavy, right? We have to be a professional, not just in winning, right? Not just in controlling our habits, our mindset, but we also have to be a professional when it comes to taking losses, okay? Because if you followed all your rules, if you're doing everything you need to do, then it is what it is when the loss comes. I don't care about losses because I followed my rules. I only lost 2%. So I really don't care about that because I already knew what I was risking before the trade, okay? I already knew what my risk was. I was focused on the things that I can control, and that was it. I don't focus on the things that I can't control, and that's pretty much what the market ends up doing after I take the trade, right? So overall, we have to really get good at taking losses, and that's why I like speaking about them so that you guys understand that it is what it is, okay? I'm the type of educator, family, where I like to be relatable, okay? I like to be relatable. And I know that a lot of people right now are probably seeing more consistent losses than they actually are wins, but when you see somebody like myself come on here and act like and pretty much act like a loss isn't nothing, take that, right? Understand that. Because a loss really isn't nothing. It is what it is. When you follow your rules, who cares? Right? So let's go ahead and see what we got going on, family. Before we even get to the actual charts, we do have major news coming out tomorrow, right? With obviously non-farm payroll, non-farm employment change, and the unemployment rate for the U.S. It's going to be a very, very big deal, guys. We also have PMI services coming released as well. So tomorrow is going to be a very interesting day for the U.S. dollar. And these are things that we have to be aware of, right? Especially something like non-farm employment change, guys, which is a major news release, right? Pretty much measures, the actual, how many jobs or how many people actually got hired from the previous month, right? The jobs report, the jobs numbers, right? These things are very, very important because this helps us really measure the strength or the weakness of an economy. All right, when we have a lot of hirings and when people are actually starting to work more and we have a ton of people starting to get into jobs, that's typically looked at as good for the economy. All right, but when we have a decrease and when the unemployment rate starts to go up, that's not looked at as good, right? That's actually a bad thing for the economy, right? So tomorrow we're actually going to get the unemployment rate itself, and we're also going to get, guys, non-farm employment change, which again just measures how many employed people are actually now here compared to the previous month, right? So that's something that's happening tomorrow morning, 8:30 a.m. Eastern. Be aware of it, especially if you're trading USD pairs like I normally trade, which is a lot of USD pairs. We definitely just got to be very, very cautious of that news release, right? So that's the first thing that I want to bring it up to you guys. Now, the second thing I also want to talk to you guys before we get into the chart, and this is going to be, again, more fundamental analysis talk. So for all of you guys that are on the call right now that are really, really trying to take trading to the next level, this is for you guys, right? Because like I say all the time, family, understanding fundamental analysis and understanding sentiment is really, really the magic sauce, right? How many of you guys have heard of trading smart money, right? Let me ask, how many of you guys have ever heard of trading smart money? Let me know in the chats. If that's you, drop a 7 in the chat. Right? If that's you, drop a 7 in the chat, right? If you ever heard the concept of trading with smart money. Because I'm going to go ahead and I'm going to expose some things when it comes to that. Right? I'm going to expose some things when it comes to that, right? Because I feel like there's a big misconception, guys, on what trading with smart money really is. Right? So let me know. Let's see. I did 12K today. Pissed it's a demo. It happens, right? Demo is still a good thing, right? At least you're learning and you were profitable. Let's see, you bringing back the old nickname, bro, Mr. Sauce. I might have to. Let's see, tell him about the gunline boss, right? Let's see, I'm really good at losing, not so good at accepting those losses. Yep, it's something we all got to grow at. Right, we got the man, the myth, the legend, Jero in the building. What's going on, Jero? Good to see you. Shout out to you for tuning in. Right, massive shout out to Sarah as well as a recent subscriber. I appreciate you, Sarah. Welcome to the family. Right, hopefully I'm able to provide you with some massive value going into today, because that's really what I be focused on more than anything is providing massive value. So welcome to you for being our newest subscriber, family. You guys know what time it is, guys. Whenever we got a new subscriber in the family, go ahead and make some noise and drop some welcomes in the chat. Make sure that they are aware that they actually decide to join with the right community, right? They decide to be subscribed, with a familia here that is truly all about taking things up a whole nother level. So massive shout out to you, Sarah. I appreciate you, for rocking with us. All right, so I see a lot of 7s in the chat, family. So let's really talk about that, right? Because when you come on social media and you talk about smart money concepts or trading with smart money, right? Everybody really talks about, really trading technical analysis, right? Which, yeah, smart money in itself, guys, could be correlated somewhat, obviously, to the technicals. Because identifying pockets of liquidity, identifying imbalances, identifying all those important things like order blocks, all that stuff does make sense, right? All that stuff is very much true. But if you really want to trade with smart money, and because when we're talking about smart money, guys, what are we really talking about? We're talking about you being able to align yourself with the biggest institutions, the largest banks in the world, the largest investors, right? The largest institutions, right? Smart money is literally the concept of trying to align yourself with the people that are, or the institutions that are actually moving these markets. Which the ones that are truly moving these markets, guys, are typically your largest banks in the world. Okay, the Federal Reserve as well has the ability to move these markets as well. Central banks have the ability to move these markets, right? So when you're talking about smart money, you're talking about trying to align yourself with these larger entities that control the market. But when we're also talking about smart money, you really have to think much deeper than just looking at technical analysis, right? You have to look at smart money, guys, from a much wider, much broader perspective. And what I mean by that is that you have to really start to look at things, guys, from a fundamental and a sentimental bias. Because the decisions that smart money makes, the trades that smart money makes, the decisions that smart money decides to make, usually more times than not, it's not based off no trend line, right? It's not based off no support and resistance. Smart money makes decisions based off fundamental data that's released, and they also make decisions based on the sentiment that they're getting from that actual data that was just released. Again, this is what they're not going to tell you, family. Let me say that one more time, right? When it comes to smart money and what they do and when they make decisions, their decisions are usually made through the data from a fundamental standpoint and their understanding of that data and the sentiment that they create off of that data. That's what smart money does. So if you really want to align yourself with smart money, then you start to understand more of fundamentals, and you also start to understand how sentimental analysis truly works. That's what's going to align you in the best way with smart money so that you can actually trade with smart money, guys. Does this make sense? Drop a 4 in the chat room. Right? If this is making sense, drop a 4 in the chat real quick. Right? Because again, this is the sauce that most people don't tell you. Right? It's not always about technical analysis when it comes to smart money, right? Smart money concepts, again, there are a lot of phenomenal traders out there that trade smart money concepts, right? I actually learned myself, from a few top dogs, right? A few of my mentors that really taught me on how to understand this concept as well, right? But one thing I was never actually taught was that smart money makes decisions based off the data from a fundamental standpoint. I was never really taught that smart money makes decisions based off what they feel the sentiment is in the market. Right? When I was taught smart money, guys, 2-3 years ago, 4 years ago, I was taught it literally just looking at it from a technical standpoint. Which again, I'm not saying there's nothing wrong with that, right? Because like I said, things like imbalances and liquidity, pools of liquidity, order blocks, right? All that stuff is very true, right? Understanding the difference between premium and discounted levels, all that stuff is true. But you got to make sure that you're tying the overall broader perspective to the whole equation as well. It's just going to make things so much easier for you to get more probable trades. So it's gonna make it more easier for you to actually take high probability setups when you understand how smart money is actually approaching and looking at these markets. Man, this is some sauce. This is some sauce, family. I told you, we're gonna start off this session today with a lot of sauce, man. Please go ahead and like this video, family, if you got some value so far. If you ain't getting no value yet, you don't have to like the video, right? But for those of you guys that got some value so far, go ahead and show me by liking the video, right? We got almost 90 people on this call. We got 24 likes. Go ahead and really drop the value or drop those likes, guys, just so I know that you guys are really understanding this so far. Let's see. I'm a dumb money concept trader. Hey, shout out to Skaggs. Skaggs got that wizard money concept. Mad respect. Yep. That boy Skaggs trades a completely different concept than most people, right? He really trades that Wyckoff logic, right? That's like a next level way of analyzing the markets, right? And guys, there's going to be times too where I actually have the boy Skaggs on here to do a joint session, because like I said, that man is extremely knowledgeable, right? That dude is extremely knowledgeable, right? For real. So make sure you understand, guys, that smart money is making decisions based off fundamentals and sentimental analysis, right? It's not necessarily just off the technicals, which is what is promoted everywhere on social media, right? It's all about understanding fundamental analysis, because that's what's really going to be the driving factor of the market, and then being able to create a sentiment around the fundamentals is really what smart money plays off of. All right, so just wanted to get that out the way, guys, because that's very, very important for us to understand. Now, something else that I also want to talk to you guys about today, and again, we are going to get into the charts, family. You guys know I don't rush into the charts because they're not going anywhere, right? I like to give you guys a lot of just insight from a fundamental standpoint, a sentimental standpoint, before we even get into the markets. Because one thing about me as a trader, guys, is that I like to create a fundamental bias first, or a sentimental bias first, before I even like to go into the markets, right? Because then when I start to approach the markets from a technical standpoint, typically it's just trying to align my technical analysis with what my bias already is from a fundamental or a sentimental outlook, All right, so I approach fundamentals and sentiment first, and then I just attach technicals to align myself and to allow me to find entries to really play out with what I believe the market is going to go. Okay? So, another thing that I want you guys to talk about, or that I want to talk to you guys about today, family, is really understanding a few key things that the Federal Reserve is actually in the process of doing right now. Right? So, the Federal Reserve, guys, starting yesterday, they are actually in the process of doing something called quantitative tightening. Right? How many of you guys in the chat understands what quantitative tightening means? Right? How many of you guys in the chat understands what quantitative tightening is, what it means, and why the Federal Reserve is now in the process, starting yesterday, in the process of actually doing that? Does anybody know? I'm pretty sure a couple of you guys, but I believe most of you guys probably won't, because I just learned this stuff too probably like a year ago. Right? But this is something that we have to talk about, because like I said, the Federal Reserve starting yesterday, they actually started the process of quantitative tightening, right? Because quantitative tightening, guys, all that pretty much means is the destruction of currency, right? That pretty much means that the Federal Reserve, and this is something I've been talking to you guys about, that the Federal Reserve is now going to be in the process of actually reducing their balance sheet. Right? I know you guys heard me say that in the past, right? That ways that the Federal Reserve can combat inflation is by, one, raising interest rate, which is something we've been speaking about a lot, but also reducing the actual balance sheet that they have, right? Because the Federal Reserve balance sheet is at almost $9 trillion. Now, the Federal Reserve balance sheet is pretty much made up of U.S. Treasuries, which is pretty much just U.S. debt, and mortgage-backed securities. That's what pretty much makes up the $9 trillion balance sheet that the Federal Reserve has to try to deal with. Okay, U.S. Treasuries and mortgage-backed securities. Starting yesterday, they're actually going to start reducing how much they actually start to take in from those aspects. Because every single month, the Federal Reserve is typically buying mortgage-backed securities so that they can resell it to other people. They're typically buying U.S. Treasuries, right? But right now, because inflation is out of control, they cannot afford to continue doing that. So they're now going to be in the process of trying to reduce how much they spend on a monthly basis. And they're also going to try to reduce, right, how much they actually reinvest into those assets so that they can try to control control inflation as a whole. In fact, I want to show you guys pretty much what it looks like. Right, so this right here on the screen, guys, right, is what the actual balance sheet looks like. Let's see. Heard of quantitative easing, but not tightening. Right, yeah, it's the exact opposite of easing, right? Quantitative easing is what? The printing of money, right? That's them actually going ahead and purchasing more mortgage-backed securities, right? That's actually the Federal Reserve actually going ahead and purchasing, U.S. Treasuries, right? Easing is the concept of them pretty much printing more money so that they can continue to stimulate the economy. But tightening is the exact opposite, where they're actually trying to decrease the actual money supply that's available. Okay? Big shout out to Have Tang in the building. Shout out to Have. I appreciate you, bro, for being a subscriber. Family, go ahead and make some noise for Have in the building, our newest subscriber in the house. Massive, massive shout out to you. I appreciate you. Welcome to the familia. I know for a fact I should be able to give you some type of value. All right, so go ahead and make some noise for Have in the building. Right, but this right here, guys, and every single one of us has access to this, by the way. Right, you can literally just type in Federal Reserve balance sheet in Google, and you'll be able to see this. Right, but this chart right here, guys, pretty much just tells us exactly how much assets the Federal Reserve has under control. Right, so as of right now, guys, we have pretty much just under $9 trillion in assets under control, the Federal Reserve per se. Now, with them now in the process, guys, of doing quantitative tightening, they're doing this so that they could try to slow this down, right? Because if you really look at this, I mean, this thing has been on absolute fire, right? Look how much money was actually printed over the past few years. Look at this, right? We went from literally about 4 trillion to 9 trillion in the past 3 years. And then we wonder why we have inflation the way that it is, where inflation is almost 9%. This is massive, right? So now what the Federal Reserve is going to attempt to do is they're going to try to actually get this thing to start going down, because they want to reduce how much assets they actually have under control. Now, the way that they're going to do that is by literally removing money out of circulation. Now, guys, basic supply and demand, right? If there's now going to be less dollars in circulation, because now they're going to be literally, once they start having all these bonds and all these treasuries and all these mortgage-backed securities, once those assets start to actually mature, and now we don't have to continue paying on them and we get all that money back, what they're going to do is literally actually destroy all that money that they decide to get back. Again, you guys want to see what I'm talking about? I mean, we have this press release that came out last month that literally tells us the Federal Reserve's plan. Now, I get it, right? Looking into a lot of this stuff is usually probably a lot of you guys don't usually like stuff like this. But this is very, very important, guys, especially if you really want to understand how to really play the markets, right? So let's just take a quick look at reading this real quick. Now, I'm not going to go over everything, right? But this is pretty much the plan for the Federal Reserve, right? It says that the committee intends to reduce the Federal Reserve security holdings over time in a predictable manner, right? That's the word predictable, which again, who really knows? It's really not that predictable, right? But they're saying manner primarily by adjusting the amounts of reinvested of principal payments received from securities held in the SOMA. Okay, beginning on June 1st, which was yesterday, principal payments from securities held in SOMA will be reinvested to the extent that they exceed monthly caps. Now, this right here is pretty much going to tell you guys how much how much money they're going to be getting and how much they're going to be reducing, right, the supply of money by. So for Treasury securities, the cap will initially be set at $30 billion per month that they're going to be removing for circulation, and after 3 months it will increase to $60 billion. Now, as for mortgage-backed securities, that's going to be set at $17.5 billion per month, and after 3 months it's going to go up to around $35 billion per month. Right? Again, this is what they're going to try to take out of circulation, because this is another way for them to try to fight inflation the way that it is. But you also have to understand, guys, that as they do this, that's most likely going to continue them to have to raise interest rates as well. Right? So this is very, very important. One thing that I want you guys to really do, guys, is actually take some time to read this stuff. Right? I get it. You know, a lot of you guys just don't care for it, and I was the same way. But once I started to understand all this, my trading went up a whole nother level, right? So what we can see, guys, over the next probably year or so, next year or two, is we should start to see the total assets under control for the Federal Reserve start to go down and start to go lower. Now, the reason why I want you guys to understand this, and it all plays in together, trust me, right, is because now what we can do as Forex traders is use this data to really correlate it, guys, with what the charts are actually saying. Because we can look at periods in time where quantitative tightening was occurring, which the last time we can see the market or the actual total assets under control right here actually decreased during this period, right? From 2017, 2018, all the way to 2019, we can literally see this curve go down, which means that they were reducing how much they actually had on their balance sheet. Now, what you want to do is compare certain assets, especially a lot of you guys that love indices, right? You can compare how the indice market reacted during this period in time, right? Whether it went up or whether it went down. And that's what we could potentially predict to occur again when the curve, it's not a matter of if, but when the curve actually starts to go down as well. In fact, let's do that real quick, right? Let's go ahead and look at this. So we're going to go ahead and take a look right at the indices. I'm going to go right to S&P 500 because it's like the main one that's pretty much used as a gauge to really, measure the strength of an economy. And let's actually see what really happened back around 2018, 2019, right? Last time that they were actually in a process of quantitative tightening. Right, let's go back. Let's go back and see what we got here, right? Let's see. And this is really, guys, how you start to understand fundamental analysis, is by understanding all this. Right, so look at this, okay? This is all February 20, 2020. Okay, so we had that drop off right there. But let's see. All right, that's something to keep in mind as well, that 2020. Right, but if we really look at this, guys, this is the one that really happened right here. Okay, last time that we actually seen them go through a process of quantitative tightening, again, 2018 to 2019, look at what the stock market did. Right, we have 2018, around August of 2018 is when we found that high, September, and then the market absolutely started to collapse during all the way up into 2019. Right, this is stuff that's very important for us to understand, because that's something that we could potentially expect to occur once again. Right, and then we also had this decline right here back in 2020, early of 2020. Right, but what actually happened during this whole thing? Right, COVID happened, guys, back in 2019, 2020. Right, so back in 2019, when they were actually at the process of still tightening, they actually had to do pretty much what is that? They had to pretty much, you know, at least Jerome Powell, right? This is when Trump was applying pressure to Jerome Powell, right? Because Jerome Powell was actually trying to raise interest rates at this time around 2019, right? And Trump, that's when Trump was pretty much threatening his job. You know, I know some of you guys that pay attention to the news, you guys probably heard this, but Trump was like, yo, if you don't lower rates, you're going to get fired, which I don't even know if Trump could fire Jerome Powell, because the Federal Reserve is not a government entity, right? I don't think a lot of you guys understand that, right? The Federal Reserve is not a government entity, right? But since he did feel a lot of pressure from Trump, he actually ended up lowering rates. And then obviously we started dealing with COVID and all that stuff, which caused them to actually go ahead and reverse trends and go from quantitative tightening back to quantitative easing. And that's why we've pretty much been seeing this massive run ever since. All right, I know this is a lot to get, family, but this is stuff that is very important. Right, because now, again, if they are going to go in, well, they are literally in the process of quantitative tightening. And the crazy thing about it is they just now started doing it yesterday, but interest rates have already started going up. Right, the stock market has already been declining. So this, in my opinions, guys, is just more confirmation that we're probably going to see a lot more downside for a lot of these indice markets, a lot of the equity markets. Right, so I'm still expecting more bearishness to come into play for sure from a long-term perspective for a lot of these indices moving forward. Right, and what I also expect is I expect that the dollar itself, the US dollar, the fiat currency itself, because of supply and demand, is probably going to also increase over time again. Right, the dollar has already been on fire. Right, the dollar has already been pretty much, I mean, it's been daddy dollar, right? It's been literally it's the strongest currency across the board for the past year. But now, because they're actually in the process of QT, quantitative tightening, which means they're literally going to take dollars out of circulation, and on top of raising interest rates, which already is having people want to hoard cash, and on top of all the fear that's been happening in the world with the stock market declining, I mean, it just makes sense, guys, from a fundamental standpoint that the dollar is probably going to increase in value because of all these factors lining up. Which is why I truly believe we haven't even really gotten to the major crazy part of the declining economy that we've been already talking about, right? I truly believe we're going to see a lot more news or a lot more, of these markets dropping, which is going to cause a lot more fear in the markets, which is going to cause a lot more chaos, a lot more uncertainty. And as Forex trader, we can use this information to really come up, though. Right? Because I don't know about y'all, family, but Like, yeah, obviously it's crazy to see the economy go to shit, but that's also an opportunity to get rich, right? Because during recessions is when millionaires and billionaires are created. I don't know about you guys, but I want to be a billionaire one day, right? My goal is to be a billionaire. Who else wants to be a millionaire or a billionaire, right? Am I the only one? Because the only reason I want to be a multi-millionaire billionaire is because the amount of lives I'll be able to impact at that point is going to be insane. Right? But millionaires and billionaires are created during recessions. So since we are aware of these things and we are aware of what's actually happening, in the future, a year, 2 years down the road, right, we're going to be able to get into the stock market and certain assets into stocks, right, at a very, very cheap price. We're going to be able to get invested into the crypto market at a very cheap price. We're going to be able to eventually get real estate at a very, very cheap price. That's what the wealthy do, right? During times of chaos and uncertainty, they hoard cash so that when they believe the bottom of the market is in, they can go ahead and start really loading up the assets. This is what we have to understand. Let's see, why not trillionaire shit? I want to be a trillionaire too. Right? There's only a few of you guys that want to be a millionaire, multi-millionaire, trillionaire. There's only a few of y'all. Let me see. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Right? There's only 12 of you guys of 100 people on this call that aspire to be a multi-millionaire. Which is nothing wrong with that, right? Not everybody really wants to be a millionaire. You know, a lot of people just want to live comfortably. There's nothing wrong with that. Think about how much comfortably you'd be, though, if you actually, were worth $1 million, worth $1 billion, right? So we should be seeing way more. But overall, guys, the whole point of me talking about this, right, is because we need to be aware of the position that we're in. We need to be aware of the time that we're living in right now. Because like I said, now is the time to really position yourself to become extremely rich, extremely wealthy, and really get into a point where you can create generational wealth. Because if you're somebody like myself, right, where I didn't come from a rich family at all, right? I didn't, right? My father was a correctional officer, right? He probably made $50,000, $60,000 a year, right? At the height of his career, right? Because he did retire, right? He probably just barely made $100,000 a year after 26 years of working that job, right? So again, trust me, I don't come from money, right? I don't come from a rich family. But one thing that will happen is that a rich family will come from me. Right? Who can relate with me, family? Right? I didn't come from a rich family, but a rich and wealthy family will come from me. Because I'm aware of what's going on in the world. I'm aware of what's actually happening. Who's with me? Who's with me? I want you guys to write that bar somewhere. Write that down. Right? I do not come from a rich family, but a rich family will come from me. Write that down somewhere. Keep that close by, because that's a nugget. That is a gem. Right? That's me. Right? Everything that I've been able to accomplish, all the results that I've been able to get, I've had to get it out the mud. Right? I've had to get it, guys, by me finding other people that I've seen successful. And ever since I've been able to do that, I've been able to see results. I've been able to really go ahead and improve my life. But the biggest reason why I've been able to do that is because I have awareness. Right? I have awareness, right? Awareness is so important in this game. The people that are more aware of what's happening are the ones that have truly become successful. I know you guys are feeling me. Let's see, me, I'm the first person in my family to own a foreign. Let's go. Let's go. That's amazing. Man, live just caught up. I don't know what you said, but I'm with you, Teach. Let's go, 20 Pip. I'm going to leave a dynasty. Yup, I'm telling you. That's the mindset you got to have. Goosebumps, I'm telling you. You got to get it. That's the whole point of what we're doing here, family. That's why we're learning this skill set. But if you really want to become a professional trader, then it involves so much more than just knowing how to do trend lines. Right? If you really want to become a professional trader, then it involves so much more about understanding. It's so much more than just understanding support and resistance. Right? It's so much more than just understanding structure. Right? If you want to be a professional, then be a professional in every aspect of trading. This is the sauce, right? But overall, like I said, I do believe that we will see a lot more downside for a lot of these indice markets that we're pretty much going to be looking at. Now, when can we actually start going lower? That's a good question. Right, I've been telling you guys that we could possibly see a reaction off of these levels right here that we're pretty much at here. And it is possible, right? Price could really realistically go ahead and shift from these areas here. It is very possible. But another area that I'm also going to keep in mind as well is going to be this area up here. Right, I do not see us passing this 4,400 level. I really don't, right? And if we do, then, I mean, again, I'll be shocked and I'll accept it, right? I'll accept that I was wrong and that's it. But I think we can really see a sell-off from either this 4,170 level that we're at now or this 4,400 level for us to continue to go lower. Okay? So that's where I'm looking at, guys, for at least the S&P 500. Right? But again, we'll get into the other indices, guys, a little bit later. Now I want to go ahead and take a look at the dollar, right? Because like I said, the dollar itself, guys, actually was very interesting today. You know, it did a little something that I really wasn't. I mean, I was expecting the downside. You know, again, if you guys were on any of my sessions, any of my streams, you guys know that I did expect the market to really continue selling off. I just wanted to see a pullback first. Right? I wanted to see a correction in the market first, back up to the upside, because we actually broke structure, and then go ahead and go lower. But based on what the market is doing now, it actually just started dropping, right? And that's, again, another reason why I did end up taking a loss today, was because the market just did not, you know, it just went the opposite direction I expected, right? But this is the thing about me, guys. Whenever I take a loss, again, I don't cry or complain about it. I utilize that data to figure out what the heck is going to happen next, right? So now that I'm looking at the dollar index, guys, and again, I love to really analyze the dollar because it just gives me a lot of insight as to what I could do moving forward, right? Massive shout out to Shiori Sylvester. I appreciate you guys. Go ahead and drop some welcomes in the chat for our newest subscriber. Definitely means a lot. All right, we also had a newest member as well, Lachelle Jones. I appreciate you for actually being a member to the channel. Right, please send me a message on Instagram. My Instagram is right below my video. Right, please send me a message so that I can get you added into my private chat, my private Telegram. You know, where we actually provide a crap ton of value in every single day. Right, because anybody that does actually subscribe to my membership through this channel, through YouTube, you guys all get added into my private Telegram. So if you guys are not in it just yet and you guys are members of the actual channel, please go ahead and send me a message, and I will definitely go ahead and get you added into that Telegram as soon as I get the message, right? So again, thank you, Lachelle. I appreciate you, and yeah, right, I look forward to really providing you with massive, massive value, right? So like I was saying, guys, what do I think is going to happen next, right? So overall, we did see the market, guys, pretty much give us a very strong push down, you know, for the dollar itself. Now, I'm going to be very cautious as to what I do here, right? Because again, we do have data coming out tomorrow. But there's two things that we can really see occur, right? We can either bounce off of this level that we're at now, because we are at a very interesting level in price, right? Again, just look at price, what it's doing, right? We have previous levels of support right here, right? Previous levels of support right here, right? So there is a chance for price to actually act as another area of support right here, right? It is possible, right? Very possible. And if that happens, then yeah, we can see the market possibly go ahead and really rebound back to the upside, right? This is one possibility, okay? And then go ahead and do something like this, right? Because again, long term, I am expecting long-term bullishness to continue to occur for the dollar. All right, so that's a possibility. That's one possibility. The next possibility is that we do just have a lot of bearishness, right? A lot of bearish momentum because, again, I was expecting the market to reach down to around the 100 level, the 99 level, right? So if we end up breaking this 101,500 level and we continue dropping, then at that point, I'm expecting us to really come all the way down to around the 100 level for sure, right? But at this level that we're currently testing, it is a very, very interesting level, you know, that the market can realistically react in different ways off of, right? Again, one thing about a trader, guys, is that we're not psychic, right? And I don't act like I'm a psychic, okay? Yeah, there's times, and a majority of the times we're very accurate, but that doesn't mean I'm a psychic, right? I just look at the data and react to the data, right? And the data as of right now is showing us that we are at a very interesting level of structure, right? That can possibly hold. And it's one that we could possibly see the market go ahead and react from to go higher. All right. So again, I'm going to be very, very cautious, guys, on what I do and how I trade going into tonight, because I'm really going to be interested to see how the market reacts to this zone that we're pretty much trading off right now. All right. Because the market gives us a reaction to go higher, then guess what? We in there. Right. If it doesn't give us a reaction, then it's probably going to continue to go lower. Right, so overall, I'm going to be sitting on my hands, right? Especially going into tomorrow morning, I'll be sitting on my hands and seeing what ultimately happens. All right, now, with that being said, let's actually go ahead and take a look at the opportunity, guys, that I did take, and I actually took a loss on, right, which was EURUSD. And you guys are going to see the exact same markup that I pretty much gave you guys yesterday, right? Shout out to you, Musa. Everybody make some noise for Musa in the chat. Welcome, welcome, welcome to the family. I appreciate you for actually joining in. And yeah, you know, let's make sure that we are ready to learn, because like I said, I'm here to provide value to every single one of y'all. All right, so this is the opportunity, guys, that we actually took yesterday. All right, literally the same exact one. Like I said, I don't move my markups, guys, when I have them on these streams, because I want you guys to see exactly how they play out. Right, so this is the opportunity, guys, that I actually took. I did end up taking a loss on this position. I only risked 2%, like I said, so for me, it's really not a big deal because I didn't risk much, right? I only risked 2%, which is what I'm very, very comfortable with risking. For every single trade that I take is usually going to be around 2%, nothing more, nothing less, okay? So, as you guys can see, I was looking for, and again, I want to explain exactly what we were looking at. We've seen the market, guys, give us a lower low, lower high, lower low type of structure scenario. So, we wanted to see pretty much a follow through back down to the downside off of these lower lows and lower highs that were being created, right? That was the thought process, guys, when we were actually looking at this. Now, again, for me, my rules were followed, right? Which is why it's not a big deal if I lost, right? This is what I would consider as a good loss, right? Taking a good loss in the market. Now, you guys are probably thinking, especially anybody that's new, you guys are probably thinking like, Abel, what the heck is a good loss, bro? You took an L. Yeah, it is what it is. Every trader is going to take a loss. It's how you actually take that loss, right? Because if you're following your rules to the T and you're not over leveraging, and you're managing your risk correctly, then that's a good loss, right? Because you followed your rules. Every trader is going to take L's. You can't avoid a loss in this market. There's nobody out there that is 100% accurate. There's nobody out there, right? It's impossible. There's not even no algorithms. There's no artificial intelligence that's going to be 100% accurate. There's nothing out there that is going to win 100% of their trades for a long period of time. It's just not going to happen. That's why there's things called good losses, right? This was a good loss because I followed my rules. Now, for any of you guys that actually took this trade as well, and if you took a loss and you over leveraged, see, now that's a bad loss. Okay, that is a bad loss. And that's nobody else's fault but yourself because you went against the rules and you over leveraged. And if that is you, that's when you have to have awareness of what you did wrong and have the discipline to try to change it. Because remember what I said yesterday, right? What's the quote that I said I was going to put on the shirt? Right? Who remembers what I said yesterday? Right? Because I told you guys yesterday that there was something that I really liked that I had you guys even write in the chat. And I said I was actually going to make merch around it because it's so important. Who knows what that was? Right? Because what I said yesterday, guys, and it's very important, is that you need to be more disciplined than it is focusing on money, right? Discipline over profits is the name of the game here. Right? Discipline over profit is the name of the game here. right? Discipline over profits, guys, is the name of the game, right? You need to focus on creating the habit of discipline more so than you're focusing on actually trying to make money. I hope that makes sense. Right? You need to focus on creating the habit of discipline more than you are on actually trying to make money right now. Let me catch up with the chats. Oh, by the way, I'm trying many ways around this, but YouTube doesn't allow monetization in my region, which won't make me eligible to become a super chatter or even join as a member, but I'll find a way. Let's see. Use a VPN, my brother. You should be okay. Yep, a VPN could definitely work for sure. All right, a VPN should definitely work 100%. Can you compare the DXY to past tightening from 2017 to 2018? 100% you can. 1,000% you can. Right, we actually probably do that too in a second. All right, yeah, discipline over profits, guys, is the name of the game. All right, so yeah, we took that L. Now guess what? We moved past it. It is what it is. Right, so now what can we see next, right? Similar, obviously, same situation, guys, with the dollar itself, because the euro does the exact opposite of the dollar index, right? So what I'm thinking could happen here is either we're going to go ahead and reverse off of this level here and really start to see more downside for the euro, okay, right out of this supply area, or price is going to break this level and then just continue to give us movement higher. All right, two things can occur here, right? And that's why I'm personally going to be a little bit more patient to see what the market actually ends up doing. Right, I'm going to be more patient, guys, just to see how we actually react from this level. Right, because especially if we were to go to lower time frames, 15-minute, 5-minute time frame, you'll be able to really start to identify what the market is truly doing. Right, because the market itself, guys, if we end up seeing a break back low like this on these smaller time frames, then that is a clue telling us that the market is getting ready to shift lower. Right, it's all about using the clues that the market gives us at key levels. Right, that's the biggest thing that a lot of people struggle with. Right, they want to know exactly when it's time to actually jump into a trade. Well, when you're at a key level, big shout out to Tammy in the building. I appreciate you, Tammy. Welcome to the familia. Shout out to our newest subscriber in the house. Everybody make some noise to her. Appreciate you. Thank you for supporting. And yeah, stay tuned because we got some value to give tonight. Right, but when it comes to identifying structure at key levels, this is what we typically do, right? Because again, there's two ways to take trades. Is either you find a key level that you like, you set the pending order, or you take the trade as soon as it gets to that area, and then you just deal with the outcome. Or what you can do is be a little bit more patient and get more confirmation of what the market is actually wants to do. Confirmation, right? It involves having a little bit more patience. Confirmation involves patience. That's another bar. Let's see, I'm telling you, that's a bar you gave me without knowing it. All right? Confirmation involves patience. Confirmation requires patience, especially when it comes to trading from key levels. So, if we see price, guys, actually go ahead and break this level, which right here, we broke this little trend line, sort of, right? But if we see price actually end up breaking structure to the downside, then that could be a clue telling us that we're going to see more downside. Does that make sense? I know it probably does. Right? Confirmation is waiting for price to give us a shift in structure, wait for that pullback, and then expect a continuation. Let me say that one more time because this is so important, right? I get this question all the time. Abel, how do we know, how do we trade key levels? I'm telling you guys, right? It's either you're going to take the trade right off there, right off the key level, and understand where your stop loss got to go, where you just take it once we get there, or you can have more patience and wait for confirmation that the market is going to actually give us a reversal. And that involves waiting for a shift in structure. Right now, we're still and this is another way, right? If you're going to be utilizing, say, things like the moving averages, which again I highly recommend, right? You can even just look at the moving average, right? Whenever price is above the moving average, that is buy zone. That's buy territory. Whenever price is above the moving average, that is telling us that we are still in buy territory. So another thing that you can also do too is wait for price to break the moving average. Especially when we get into a key level, wait for price to break the moving average, wait for a retest back up to the moving average, and then from there, we go ahead and we ride it out. Now, when I'm talking about a break of the moving averages, guys, like I want to see an actual break, right? Like I want to see two candles close below, at least two candles close below the moving average. Okay, I want to see two candles close below it, not just one, right? Because if we get one, we can see something like this occur again, right? Where we actually break the moving average and it gets completely rejected, right? We break it, but then it gets completely engulfed and we're back above it. I want to see multiple candles break below it with some type of momentum. Then we pull back to the moving average. Then we enter once the market actually stays below that moving average. That's a very, very simple way, guys, of actually knowing when it's time to jump in. Do you have a video on the moving average? I actually do, right? I'm actually going to create more, right? In fact, I'll probably create another video on moving averages tomorrow, right? Because tomorrow is Friday, so I don't do a live stream on Friday, but I do go ahead and drop a video for you guys on Fridays, right? So I'll probably do a video more in depth on how to trade these moving averages. I got you. But that's typically what I want to see now. If we end up breaking the moving average tonight, I'll wait for the retest back up, and then I'll go ahead and look for the continuation to really go ahead and ride it lower. It's that simple. Remember, trading, guys, is actually very, very simple. Like, it's really not that complicated, especially when you keep things as simple as can be, right? Because trading needs to be simple. Because trading, the hard part of trading is being able to control your emotions, right? Developing the correct habits. What separates the profitable traders from the non-profitable traders is the habits that they're able to develop. The reason why you probably understand a strategy, but you're not profitable just yet, is because you haven't developed the correct habits that you need to actually develop that habit. I hope that makes sense. Right, family, shout out to Mahad in the building. We got a new subscriber as well. Mahad, I see you. I appreciate you for locking in with us. Thank you so much. Welcome to the familia. Right, family, we got another new subscriber. We got Paisan in the building as well. Shout out to you, Paisan. I appreciate you. Welcome to the familia. How are you doing? Welcome, welcome, welcome. All right, go ahead and drop those welcomes in the chat. Let's see. I think I'm going to rap battle all these bars we're dropping tonight. Right? Thanks for that entry, Sauce, too. Patience brings confirmations. Different over profits. Let's see what can happen next. Those are bars, man. I need to get some shirts made. I'm telling you. I need to get some shirts made or some flashcards made and just have all these quotes on it because these are all very important. Right? So very simple. Wait for the break, the retest, and then you can go ahead and ride this thing lower. Wait for the break, the retest, and then ride it lower. It's that simple. Right, but other than that, I'm going to be very cautious going into tonight. Let's see, what are your moving average settings, right? So I got the 50 period EMA and the 20 period EMA. They're actually right up here in the top left corner right here. The 50 period EMA and the 20 period EMA, right? These are the ones that I pretty much got right up here. The 50 and the 20. All right, the 50 and the 20. All right, so that's where I'm at for EURUSD. Like I said, I'm going to be a lot more patient than anything tonight going into tomorrow morning. Just because, again, be aware, guys, we do have major news in the morning. I'm going to keep on saying it because it's very important. We do have major news in the morning. So, family, if you guys have gotten some value so far tonight, just do me one favor and just like the video. Right? Do me one favor if you gotten some value tonight. Only if you gotten value, go ahead and just like the video for me. It just helps this stream, guys, go out to more people. You know, because my goal is to eventually really become one of the best Forex traders on this platform that's actually providing you guys with real, actual value. All right, I appreciate every single one of you guys ahead of time that actually do go ahead and like the video. Right, so let's go ahead and take a look at a few other pairs, guys, and see what we got going on. Let's see, do those work the same as the DeLorean EMAs, right? They are very similar, but the EMAs for the DeLorean itself, like, you know, they all have different purposes and different reasons behind it, right? But it is a very similar way of still looking at it, for sure. Definitely very similar ways. Let's see, could you make a video in the future on entries? Yeah, for sure, I got you. Right, I'll definitely make a few different videos for you. All right, so let's see what we got here, guys, for dollar yen. Like I told you guys yesterday and pretty much every single week since we started doing these streams, I believe that we're still going to see a lot more bullishness, guys, for the dollar yen. You know, I'm a very, very big fan of continuing to look for this thing to go higher and higher and higher. I mean, look at how this thing looks on the weekly perspective, right? Like, this thing has been absolutely on fire. And not even just that, guys, but just look at the price action. Right? Massive run. We've seen almost 2-3 months of just straight bullishness here. Right? Then we had, you know, a little cool off period for 3 weeks. But look at this massive candle. Right? Like, look at this massive weekly candle. Like, this thing is massive, right? We pretty much engulfed the previous 2 weeks that we actually seen. So I believe we could definitely see, and again, this is just my opinion, I could be wrong, right? But I just like more upside here, guys, for dollar yen. Right? I really do, right? So for tonight, or any night for that matter, I want to be able to find more opportunities to go ahead and go long, specifically for this this specific pair. Right? So a couple levels that we can keep our eyes on is possibly going to be this 128.7 level, 128.7, 128.8. That's one area that I really like. Let's see, we got Joshua in the building. Shout out to Joshua. I appreciate you. Recent subscriber in the house. Shout out to you. Let's see, just subscribed. Everybody make some noise for Police Station Productions as well. Shout out to you as well for being subscribed. I appreciate you. Welcome to the familia. Right, so family, this is going to be the first area I'm really going to be looking at for potential plays, 128.7. Another place that I'm also going to be looking for potential areas to buy from is probably going to be down here at around this 127.5 level, right? It might be a little bit higher, maybe even around 127.8, right? That's another area that I'll be very interested in looking for some longs, right? But overall, guys, when we get down to this level, same thing I taught you guys about the key levels. Wait for, you know, have patience, wait for price to give you the reaction, and then we'll be able to, you know, look for some plays like this. Right, that's really what I want to be looking for going into tonight to see what happens. Right, a reaction off of these levels, I'm definitely most likely going to be looking for opportunities to buy dollar yen. Right, very big fan of it. I think it's very possible. That's really what I'm going to be looking for. So if we get it, we get it. If we don't, it is what it is. Right, but that's what I want to see, guys, for dollar yen going into tonight and going into tomorrow, and then possibly even going into next week. Okay, let's see. Hi, brand new viewer here. What's going on? Case. What's going on? Shout out to you. I appreciate you. Welcome to the family once again. Thank you for being subscribed. Thank you for being a part of the familia. And yeah, I hope I'm able to give you some value tonight and tomorrow and moving forward. All right, let's go ahead and take a look at pound yen, guys. Right, this is definitely a fan favorite. It's one of my favorite pairs to actually trade as well. And I also just kept the same exact markups that we talked about last night. You know, because overall, guys, for me, I was expecting long-term for price to really go higher. But last night, I was thinking that we were actually going to go lower from these levels first before we went higher. But I also gave you guys a different bias, right? Again, these arrows were created last night, right? Typically, the ones that I actually take a trade on myself, I don't like to change those arrows because I want you guys to see them, right? So originally, I wanted to see price collapse lower. But I also told you guys yesterday that if we actually end up breaking above this level right here, the 162.6 level, right? If we break above that level, then we're going to probably experience more upside. And guess what we did? We seen more upside, right? That's exactly what we did, right? This play right here was more so all about just reacting to what price actually ended up doing, right? So I was able to get in this, guys. So again, my setup ended up looking something like this, right? I ended up jumping in, not on this bearish candle, but I ended up jumping in when we closed back above price, My stop loss was right below the 50-period moving average, right below this candlestick right here, right? And then my target was right back up to these initial highs. All right, so it was around a 3.5 to 1 risk to reward. Now let's do the numbers real quick, right? Again, I took 2 trades last night, right? EU, I took the first trade, right? And I lost 2% on EU, right? So on EU, Euro USD, right, I ended up losing for negative 2%. But GJ, I also took pound yen, and for this one, I was also risking 2%. But since our risk to reward was 3.5 to 1, I actually ended up making 7% on this one position, which overall leaves me for the day, I was in profit 5% for the day. Okay? This is why for me, guys, I don't care about win rate. Okay? I don't care about win rate. Let me say that one more time. I don't care and I don't focus on my win rate. I focus on risk to reward. Because technically, I had a 50% day yesterday, right, in terms of win rate. I won one and I lost one. But I made 5% on my account. Right? 5% on my account. Are you guys seeing this? Does this make sense, guys? Right? Shout out to 20 Pip Savage. I appreciate you, bro, for that super chat. 1999. Shout out to the boy. I appreciate you, bro. If you want anything analyzed, if you want any pair you want analyzed tonight, you know that I will stop everything to analyze that pair because you are a superstar and you actually went and supported the channel. So if you want anything analyzed, bro, please let me know and I'll definitely go ahead and analyze any pairs that you want. You are now up there with the man, the myth, the legend, Bert, as the super chatters in the house. Appreciate you guys. Thank you for supporting the channel. So if you want anything analyzed, definitely let me know and I'll get that for you for sure. As soon as you say it to. Right? So, does this make sense, family, right? Look at this. 2 trades. I lost one. I made 7% on the other one. I'm still up 5% gains. That's the name of the game here. Right? It's not even about win rate. Don't focus so much on your accuracy because that's only going to cause a lot of stress. Focus on your risk to reward. Right? Risk to reward, in my opinion, is the secret nugget to trading. Right? I get this. I'm not going to say I get this question, right? But I know a lot of people that ask myself, they used to ask me all the time, Abel, what's the secret thing? What's the secret sauce for trading? Right? I know a lot of you guys are probably thinking like, man, I need to find that one secret gem, that one secret sauce, that one nugget that can really change the game for me. That one thing is risk to reward. That one thing is risk to reward. Okay? Make sure that you understand the importance of risk to reward, especially early on as a trader. Right? Because right now you're probably experiencing more losses than wins. And that's completely fine. Right? Because you don't need to be 100% accurate to be profitable. You really don't. In fact, that's impossible. Guys, but what if I told you with a proper risk to reward of 2 to 1 or 1 to 2, right? Which means if you're risking 2%, you're going for 4% gains. If you're risking 1%, you're going for 2% gains. If you utilize that type of risk to reward, then you can be 50%, 40% accurate and still be profitable. You can win 5 out of 10 trades, which is actually very doable. You can win 5 out of 10 trades and still be profitable. Guys, that's the name of the game here. That's the secret sauce. Don't focus on your win rate. Focus on risk to reward. I do not take trades, and this is just me personally. This is more of a preference, right? Again, I'm not saying that any other way is wrong, right? There are people that take trades at a 1-to-1 risk to reward, and they're profitable, right? It is what it is. But I do not take trades unless it is a 2-to-1 risk to reward. I just don't. Right? So that means if I'm risking 1%, I need to be going for 2%. If I'm risking 2%, my gains need to be 4%. If I'm risking 5%, then my gains need to be 10%. Because that allows me to take losses not stress about the losses, because once I actually take that win, it's going to make back all the losses that I probably ended up taking. Like I'm being transparent with you guys right here. I'm showing you guys exactly the trades that I took, and I'm showing you guys the outcomes. Right? And these are all setups, guys, that we actually spoke about yesterday, last night's stream. So again, focus on risk to reward, not focus on risk to reward more so than focusing on win rate. That's a bar. That's a bar. All right, so let's go ahead and take a look at, matter of fact, let's look at GJ and what can we expect for GJ now, right? I want to see more upside for GJ personally. Right, I want to see GJ actually continue going to the upside. I'm a big fan of seeing more upside for this. Right, so going into tonight, that's probably what I'm going to be looking for. Right, I'm probably going to be looking for opportunities to actually go ahead and take a long position here on GJ. Right, the question is, where can we take a trade from, and how are we going to take a trade from, and what can we potentially look for? Right, so I'm going to go ahead and erase the chart real quick. And I'm going to give you guys a few different areas that I really want to go ahead and take a look at. Right, I'm going to look at a few different levels. All right, the first level, guys, I really do like this level down here. Right, this 162 level, I do like it. Right, even though we did see price actually go ahead and break structure to the upside, I still like this 162. Right, but let's go ahead and go to lower time frame real quick, right? Because I want to show you guys something on the 1 hour that I'm going to be focusing on and paying attention to. All right, so what I want to see going into tonight is I'm looking at that 162, but we might not reach it. Right, we might not reach it. Right, so the next area I'm really going to be paying attention to is probably going to be this 162,700 area. Right, 162,700. Right, a reaction off of this level here can trigger a potential move higher. A reaction off of this demand zone right here at around 162.5, 162.6 can potentially go ahead and really trigger a nice move higher. Let's see, I am new here, but I like the mindset. What's going on, Phantasma? Shout out to you. I appreciate you for being a part of the family. Definitely means a lot. Thank you so much. Make sure to be able to ask questions if you have those questions, and we'll definitely try to get those questions answered for sure. All right, but welcome to the family. Right, but yeah, guys, tonight, like, I really want to see more upside. But similar thing, right? The reason why I want to see more upside is because what has been the overall trend of this market. Guys, the first thing you need to, this is rule number one. Right, outside of trying to figure out fundamental and sentimental analysis, which should be your main things, you guys really want to get in the habit of understanding fundamentals, really get in the habit of understanding sentiment. That's the overall market driver. That's the driver of this market. That's what creates long-term direction, is fundamentals and sentiment. But from a technical standpoint, the first thing you want to do is identify the flow of this market. What is the flow of the market? What is the trend of this market? What is this market currently doing? That's rule number one. That's the first thing that we do, is we figure out what the direction of the market currently is. Based on what we're seeing right here on GBPJPY, on the 1 hour time frame, right? Different time frames could say different things, by the way. It is what it is. But if we're trading on the 1 hour time frame, what is the flow of this market? What is the direction of this market currently right now? There we go, Mike. The trend is your friend to the end. 100%. That's another bar. Right? What is the trend of this market? Yeah. I want to see more answers. I want to see more answers. Even if you got to copy your friend, it's cool. Right? I used to go through school when I went to school, I was the one copying off of people. So trust me, I'm cool. Right? It is what it is. Right? There's nothing wrong with copying cats there's nothing wrong with copying people or copying as long as you're copying the right cat. Right? There's nothing wrong with it, right? So I want to see more answers. Let's see, what broker do you use? I use two brokers currently. Right? I use Henkel Trade, which is actually a sponsor to my channel, to be honest with you. Right? Henkel Trade, shout out to them. Right? The link in the description. Link in the description is actually a link for that broker. because they do sponsor these, a few of my videos. But then I also use Nash Markets. Right, Nash Markets is another one that's really, really good. Best broker and platform to trade Forex. MetaTrader 4, MetaTrader 5 is the platform that you're actually going to be utilizing. It's an app or a desktop service. Right, and then you want to find a broker, and the brokers I just said, Henkel Trade and Nash Markets are my two go-tos. Right, but yeah, guys, right, the market right here is uptrend. Right, so if the market here is in an uptrend, and trading is all about probabilities, what is going to be what type of opportunity should we look for that's going to give us the best probability in this market right now? Right, is that going for a buy or going for a sell? Should we be looking for a buy or should we be looking for a sell when it comes to probabilities? What is the likeliest thing for this market to do in terms of probability? Are we more probable to go down or are we more probable to go up for the long term? Let's see. Looking for the buy when forming higher lows. Exactly, Pat. Shout out to you. Right, that's 100% real. 100% true. Yeah, we going in this session, family. I promise y'all we going in. All right, if you guys are getting value, family, definitely go ahead and smash that like button as well. All right, because I can't wait till we're able to actually surpass 200 viewers, consistently getting over 200, and then eventually 300, and then eventually 1,000. That's the goal. Right, but yeah, guys, this market is all about probability. Right? The market is all about probability. So your job as a Forex trader is to look for the most probable opportunity that makes sense. Right now, yeah, we can see possibly a sell-off to come down to these levels. And I'm not saying that you can't counter trend trade. I'm not saying you can't do that, right? You can counter trend trade if you know what you're doing, if you're experienced. The key word here is experienced, right? If you have experience, then you can catch the buy and the sell all day long, right? Do your thing. Do your thing, right? It is what it is. But if you do not have experience, then the best thing that you should do is always try to stay with the current trend. Because that's going to be the path of least resistance. Right? When you stay with the trend, you are trading with the path of least resistance. And that's what you really want to do. Right? You want to trade with the path of least resistance. Right? So yeah, right now, I do believe we're probably going to sell off a good 50, 60 pips. But then from this level of structure right here, I also think that we have an opportunity to continue going higher. Now, if price actually shifts, because it actually does start to reverse, we're going to see price actually break the moving average. And then from that point, we use that same exact level to then say, you know what? The market actually broke structure. It broke the moving average. We're going to actually go ahead and change our bias. Use that same exact level as a flip zone. And then from that standpoint, we'll go ahead and look for a possible move lower if that were to happen. But for right now, I'm liking the buy. I'm staying with what the market is possibly going to continue to do because that's what the overall flow of this market has been. The overall flow has been to the upside. Right? So I want to stay with the path of least resistance until proven otherwise. Proven otherwise is us breaking back below this level, which is also going to be breaking a level of structure. And then from that point, we go ahead and we just change our bias and ride it out the other direction. Right, big shout out to that boy Kyle, right, with the 99-cent sticker in the building. Shout out to you, bro. I appreciate you. Thank you so much for supporting the channel. You know the vibes, man. Definitely means a lot to me for sure. Let's see. What else we got here? Do you think the dollar index turned bearish after the daily break of structure? That's what I was initially looking for, Kevin. Right, like yesterday we spoke about this as well. I wanted to see the market really, and I still think that it is possible for it to go lower, right? And I'll show you the dollar as well, just so you guys can see. But this is what I'm looking for GBPJPY, guys, right? A retest back down to 162.6. I really like that area to go long. Right, but yeah, you know, look at the dollar here. Right, so I've been expecting some bearishness because of that break of structure that we've seen. Right, and also because of, I mean, look at this, right? We had a daily engulfing right here. Right, that candle closure is pretty strong. But one thing that we do have to keep in mind as well, right, is that tomorrow's data, right, because we do have non-farm payroll tomorrow, that could really be a deciding factor for a lot of things, right? And also looking at structure from these smaller time frames, we might be seeing something like a head and shoulders pattern right here, right? Because technically we actually did break structure right here, right, on this smaller time frame, on the 4-hour time frame. So that's why for me, when I said earlier that, you know, the market could do one of two things, right? It can either continue to sell off, which I would not be surprised about, or we might actually use this area as a support and price actually bounces off and that head and shoulders does actually validate and we actually go higher. Right, it is possible, right? That's why for me, I'm on the sidelines right now for, you know, the dollar itself, because I really want to just get a little bit more insight as to what can potentially happen, right? So you're right, though. You know, there is a possibility. I was actually expecting the market to actually continue dropping, but now just based on how it's reacting, I wouldn't be surprised if either or actually happened. Like, I wouldn't be surprised at all. Let's see what else we got here. How do you trade Forex? You trade Forex by actually connecting to a broker account. This is what we call trading on margin, right? Because certain brokers give you leverage, which allows you to actually place certain trades. This is a fun fact, family. If it wasn't for technology, none of us would be able to trade Forex today unless you actually had a lot of money, right? Because the Forex market has been around for it's been around for a while, right? But the only way that you were actually able to profit in the Forex markets back in the day, 20 years ago, right, was if you actually went to the bank and converted your money for another foreign currency and you held it, and then you actually try to trade it back, right? You were literally trading at a 1-to-1 leverage. Right, shout out to our newest subscribers. I appreciate you guys. Style, what's going on? And I completely missed the other one, right? So whoever just subscribed before got Style, I appreciate you. Welcome to the family. We got Mercator as well. Shout out to you. Welcome to the family. Appreciate you, right, for locking in with us. Right, we got Mozart in the building as well. Shout out to you as well for locking in and being a part of the familia. Definitely means a lot. Thank you for being a subscriber, man. We just had 4 people. We had 5 people right now that just subscribed. Shout out to S Fundo as well. Appreciate you for being a part of the family. Right, we just had 5 people pretty much lock in back to back to back to back. So shout out to you guys. Family, go ahead and make some noise to our newest family members in the building. Right, definitely means a lot. Like I said, you know, shout out to every single one of y'all. Okay. I love it. I love it. I love it. I love it. So again, I'm very cautious right now for the dollar. I'm gonna be on the sidelines for right now to see what actually happens. Like I said, I'm really leaning towards a push back up, if I'm being honest. But I would not be surprised if the market actually did end up dropping. Let's see what else we got here. I know how to trade. I don't know how to trade with Forex. Yeah, so back to what I was talking about with Forex, right? So when it comes to Forex, back in the day before technology, you had to do it at a 1-to-1 leverage, right? A 1-to-1 leverage, right? Which literally means like you had to have a lot of money for it to actually make sense, because in order for us to profit in the Forex markets, all we're really doing is capitalizing off the fluctuation that price actually makes when it comes to trading 2 currencies against each other. All right, so because of technology and because of these brokers now actually allowing us, or actually these brokers being a part of technology or leveraging technology, that's why the everyday person now can come in and actually trade Forex. In fact, if it wasn't for these brokers offering leverage, none of us will be able to trade unless you actually have millions of dollars to do it, the actual old way, right? So we got to thank technology. Technology changed the game. Guys, actually trading on margin the way that we're doing has only been around for 15 years, 20 years, right? And that's because, again, we have now the ability to trade on margin. Let's see, do you make money trading Forex? 100% you can, right? It's not easy, but it's very possible. Right, it's not easy, but it's very possible. How much money do I need to start trading Forex? You can deposit with as little as 10 bucks, fiat, 50 bucks minimum, Bitcoin. Yep, there we go, BTC. Right? You really can start trading with a very small amount. Right? But I recommend don't even bother until you actually learn how to do it. Right? We got Paul in the building. What's going on, Paul? Shout out to you. Welcome to our newest subscriber, Paul. Appreciate you for locking in. Right? But yeah, if you want to learn how to trade Forex, start with a demo account, paper trade. Right? Get a paper account, paper trading account, demo account, and really start to learn, you know, the basics of the market. Right? Massive shout out to Luis Lopez as well, who just locked in. Right? For also giving us a super chat. Giving me a sticker in the building, $1.99. I appreciate you, Lewis. Thank you so much for supporting the channel. Definitely means a lot. If you have any questions or any pair that you want analyzed, please let me know and I'll get right to that as soon as you actually go ahead and ask it. Let's see which pairs to trade, right? That is up to you, right? There's literally a whole bunch of pairs to trade. These are the ones that I actually trade myself. These are my watch list setups right here. Right, so let's go ahead and take a look at these indices, guys. Now, SPX 500, NAS 100, US 30, and see pretty much what we got going on over here. Because they did actually see a nice rebound today. You know, they actually did go up, you know, back to the upside for at least right now. You know, we did see an increase in momentum for a lot of these indices. But what I think, right, and I could be wrong, right, but what I think is going to happen, I'm very interested in seeing this stuff, guys, really turn around. Like, I think that there is a good chance that we actually see price end up shifting lower. All right. So what I'm looking for going into tonight, especially looking at, you know, I'm going to look at NAS and then I'll look at SPX. Matter of fact, I'll look at SPX just because it's a little bit more broad. Right. But looking at SPX, guys, we are actually at very, very interesting levels right now as we're speaking. Right. And these are levels, guys, that the market can definitely go ahead and react from and send us lower. All right, because when we're looking at what the overall market has been doing, at least for this past month or two, we have seen a lot of bearish momentum. It's recently where we actually started to get this nice bounce off this market. And this bounce in the index market probably just happened from the positive retail sales data that actually was released. Right, retail sales data actually came out very positive, you know, because, you know, it showed that consumers are still spending. Right, consumer spending, guys, really does account for a lot of the GDP that's over here in the US. So retail sales coming out higher than expected is good for the economy, right? It shows optimism in the markets, right? Which will cause a bounce in the markets like we just seen. But I think that this bounce is going to be pretty much over, right? I actually want to see this thing now really start to go back to the downside. All right, now it could happen from this level that we're actually trading off right now. That is a very possible play. If it doesn't go from right here, then we do have the possibility of coming up to these levels at around 43.80 before we actually go ahead and see another turnaround, or at least when. Then I'll probably expect a turnaround from those areas. But I would not be surprised if we did see the market, guys, actually go lower from this 41.80, 41.90 level. I would not be surprised by it. Right, so I'm going to be keeping my eyes on this level for sure, seeing how the market reacts, you know, because I could be wrong, right? And if I'm wrong, it is what it is. I have no problem being wrong, right? But if I'm wrong, I'll accept it, and I'll just reanalyze the markets and adjust. But I really like the potential downside here, right? Ultimately, like I said, tomorrow can really give us some insight as to what's going to happen. We're definitely going to see tomorrow what happens, right? Because tomorrow the market's either going to break this level, or it's going to hold this level and actually start dropping. So we'll see what happens then. Let's see. Can we take a look at NZD USD 100%? Kyle, you did actually send a super chat, a super sticker as well. So whatever you want from me, any pairs you want me to analyze, my brother, I got you, right? So let's go straight to that since you asked. Because like I said, anybody that does support the stream, guys, with a super chat, with a sticker, anything that supports the stream, you guys get no matter what. I'm always going to be looking to give you guys some type of value. So let's go ahead and take a look at NZD USD, right, and see what we got going on here for New Zealand dollar. All right, so last time we actually looked at New Zealand dollar, I wanted to see price come up to this level that we're currently at right now and then give us pretty much a reaction to the downside. Now, do I still think that that is going to happen, or is that still my bias? Well, yeah, probably, right? I still think that there is a possibility, guys, for price to really go ahead and shift lower for New Zealand dollar, right? But The only thing that I'm really also paying attention to, and I'm definitely going to be considering, is the fact that there is a chance for price to even spike up to around 0.67 before we actually end up going lower. Okay, but I do believe eventually we will be seeing more downside here for the New Zealand dollar against the US dollar, right? I'm expecting a lot of weakness or potential weakness to really start to come into play, guys, here for the New Zealand dollar. But like I said, going into tonight, there is a chance that we actually start seeing it from these levels that we're at now. You know, we are starting to get a lot of rejection from this area here. So what you can do for anybody looking at the New Zealand dollar, what you can do, we already shifted it on the 5-minute time frame, but what you can do is look for that shift on smaller time frame. Right, what I would look for is literally this. Right, what I would like to see is the market itself go ahead and break this level. Right, break that level, retest that level, and then from there potentially go ahead and give us a move downside. Right, if we can break that 50-period moving average, then I'm expecting a lot more bearishness for sure. Let's see, when are they the most active to see faster movements? All right, that's a good question, right? So these currency pairs, guys, are the most active during London session and New York session, right? London session starts at 3 a.m. Eastern, and it goes all the way to about 12 p.m. Eastern, while New York session opens up at 9 o'clock Eastern in the morning, a.m., and that goes to about 4 or 5 p.m. Eastern. Okay, so that's what I'm looking for. Let's see, what indicator is you using, right? This indicator down here is the MACD. Right, I'll be creating a video on how to actually utilize the MACD, so you guys are aware how to use that as well, right? But that is the MACD, the one that I'm using right now. Let's see, can you give me your bias with comparing in the tightening to the dollar index? For sure, right? So with tightening, again, when you are talking about quantitative tightening, that means the reduction of the balance sheet, right? Or the destruction of the fiat currency itself. So with tightening actually happening, that means less dollars are going to be in circulation. When there's less dollars in circulation, but the demand for the dollar is still the same or higher, what should we expect to happen to the actual currency? Answer that question in the chat, family, who knows the answer. Okay, because quantitative tightening literally just means that they're going to be taking dollars out of circulation. Right? When they remove dollars out of circulation, but the demand for the dollar is still the same, that's going to make the price of the dollar actually increase in value. So that's why for me, I'm still expecting long-term bullishness for the dollar index. Right? I'm still expecting long-term bullishness for the dollar index. It's just a matter of when it's going to happen. Right? Again, we do have tier 1 data getting released tomorrow, and that could be the catalyst to really send dollar flying back to the upside. And that's why we go ahead and we just, react to what the market gives us. Let's see, can you scout Forex 15 5-minute time frames? Yes, you can. I definitely can. 100% you can. Let's see, it sounds you are guessing. It sounds like you are guessing. Well, trading is typically just guessing, right? Trading is all about probability, right? Nobody knows for 100% certainty as to what's going to happen in the markets, right? So if it's a guessing, then it's more of a, what is that word I'm trying to look for, right? It's more of a high quality guess, right? We could say it like that, right? It's high quality guessing, right? Because we use data to really guess in the markets. What's your basic strategy? That's a great question, right? So I typically, from a technical standpoint, I trade basic market structure and price action, right? That's my strategy, right? Understanding how to read price action, understanding how to read structure is very, very important for me. Right, and it's very simple as just identifying the trend, identifying the trading range that I'm really going to be playing in between, and then identifying a pocket of liquidity where I expect the market to go ahead and run towards, and then it's all about just finding my entry. Like those are my 4 steps that I pretty much look for. But my main strategy revolves around fundamental and sentimental analysis, right? Because before I do anything from a technical standpoint, I have to have some type of understanding from a fundamental standpoint, right? I need to understand exactly what's going on from the fundamental standpoint, right? Like exactly what we just talked about, right? With right now, quantitative tightening is now literally happening starting yesterday, right? Quantitative tightening is the process of then removing dollars out of circulation, okay? When we remove dollars out of circulation, that's going to possibly create a lot of bullishness for the dollar itself, but that's going to cause a lot more fear in the markets as well. Right? A lot more fear because we already been seeing interest rates go up, which interest rates itself is going to cause as well a lot more people to start hoarding cash, right? Less dollars in circulation because of interest rates as well, right? So that's why I'm bullish the US dollar compared to everything else, right? So if I'm bullish the US dollar, then I'm pretty much going to be wanting to sell everything else against it. And I trade predominantly USD pairs, as you can see, right? So I create a fundamental bias first, a sentimental bias first, depending on whether we're risk on or risk off sentiment, and then I look at technicals to really align myself. Let's see, an educated guess. Yeah, that's what it was. Educated guessing over random guessing. This is why casinos don't like card counters. Exactly, right? 100%. Right, so that's pretty much what we're looking at for New Zealand dollar, right? If we can break lower, then that'll be lit. If not, then there's also a chance for price to continue higher. But I think we had a chance where we could probably go lower. Does it cost gold to sell, right? That's a very good question, though, right? Because gold is a little different. Right, gold, yeah, is being traded against the dollar itself, but you got to understand, gold is also going to benefit during times of quantitative tightening as well. Right, because when investors or institutions, guys, are now starting to liquidate their assets out of the equity markets, they're usually going to put it into either gold or the dollar. Right, they're going to go to more safer place. So gold itself can possibly even benefit as well during periods of quantitative tightening. And that's very interesting to see which one is really going to take float, right? Because over the past few months, besides recently, the dollar has just been massively in control, right? The dollar has been even stronger than gold, which is why the dollar has been flying and gold was actually going lower. But during all the chaos that we've been seeing, right, with now quantitative tightening actually happening as well, you never know, right? We might continue seeing gold continue to go higher. My guess is that gold continues to fly. Right, big shout out to Abdul in the building. Welcome to Abdul. I appreciate you for tuning in. Welcome to the channel. Welcome to the family. I look forward to actually going ahead and providing with more value. Let's see. I always wonder how casinos figure it card guessing like they can't read minds. Don't mind. Right? I mean, that's a skill in itself, right? Knowing how to read cards. Let's see. What broker you use, right? So I use two brokers. I use Henkel Trade. The link is in the bio below. Link is in my description if you want to have access to that one. And I also use a broker called Nash Markets as well. Right, those are my two brokers. Right, so overall, guys, right, we're going to have a very, very interesting day tomorrow, seeing how the market really reacts. Again, keep in mind, tomorrow, guys, we do have major news with non-farm payroll, non-farm employment change, and the unemployment rate for over here in the U.S., which really will give us a lot of insight as to what's happening. As of right now, the prediction is that we're going to see 325,000 new jobs actually added to the workforce, which technically is 100,000 less than the previous month. Okay, I'm looking for a gold retrace back to 1860 tomorrow to the moon. It's very possible, Tevin. Right, because look at this, right? Tomorrow they're predicting 325K new jobs added. But that's 100,000 less than the previous month. That's a big drop in numbers. So in my opinion, if this number comes out as predicted or even lower than what's being predicted, that's not good for the economy. So the equity markets will probably suffer because of that. Currencies like the dollar will probably increase. Gold will probably increase. If this number actually comes out as predicted or anywhere near this number, I think that the equity markets are going to fall. I think gold is going to fly. I think the dollar is going to fly. So, you know, we'll see what ultimately happens. But that's pretty much what my prediction is as of today. And it's going to be very interesting to see exactly how this market actually does come out for tomorrow. Gratitude for responding to my question, of course. Of course. Yep, risk off is probably going to lead. Tomorrow's news can really lead to more of a risk off sentiment. Exactly. How are you using those moving averages? Do you do top-down analysis with those? Right? Yeah, 100% you can. Right? So there's 4 reasons, actually 3 reasons, guys, why I use the moving averages. Right? That's a good question. 3 reasons why I use the moving averages. Write these down. Right? I use the moving averages to help me identify a trend. Okay? Moving averages, the first way is to help me identify a trend. The second way I use the moving averages is to help me identify support and resistance, because these moving averages do act as dynamic support and resistance. And I also use the moving averages to help me identify entry points in the market. And I'll create a video on that tomorrow, right? That's what I'm actually going to do tomorrow. I'm going to create a video on how to really utilize moving averages to pretty much find the best opportunities in the market. Right? But those are the three reasons, or the three ways that I utilize the moving averages. Okay? Trend, support and resistance, and entries. All right? Perfect. But family, besides that, one last thing before we get off this, I highly recommend you guys to really just start doing your research on quantitative tightening versus quantitative easing. Highly recommend you guys to really become familiar with, the balance sheet for the Federal Reserve, because typically what happens here, we can really see a lot of reactions to the market based on what the Fed is actually doing. Again, right now they're going to be in the process, guys, of quantitative tightening starting yesterday. So we are going to start seeing a reduction on the balance sheet for the Federal Reserve, which means less dollars are going to be in circulation, which can cause the currencies to actually increase in value. Right now, big shout out to our newest subscribers. Right, I missed the first one that just popped up, but we also got future handles in the building. Welcome to the familia. I appreciate you. Hopefully, you get some value here, man. Let's see. Can gold and dollar fly up at the same time? Didn't know that. Thought they usually go opposite because it's gold. Now they actually very much can. Right, you can see gold actually increase while the dollar's increasing. The reason why that can happen is that gold itself is just more stronger than the dollar at this current time. Right, it does happen. Right, it is possible. Right, and you can actually back test it. Right, like go look at the dollar index, and then go look at gold and see see the periods in time where it does happen, because it does happen. Right, typically you obviously want to, correlations will say that they will go opposite, but typically there are times when it does actually occur. Whole econ class out here. Yep, that's what it's all about. Do you have a video going over a daily basis, or if the market is in a premium or a discount? I actually do have a video on the actual channel talking about premium versus discounted levels, but I'll give you a breakdown very, very quickly about that. It's so easy, right? Like when we're talking about premium and discounted levels, it's extremely, extremely easy to really play off of, right? You want to use your Fibonacci tool to help you out, when it comes to identifying premium and discounted levels. So this is how we do it, right? Very simple. Say we have an impulse in the market, right? When it comes to identifying discounted and premium levels, the first thing you need to identify is an impulse in the markets, right? A strong swing move, right? And then during the correction of that market, right? Which a correction is literally just a retracement against the overall move, right? You want to bring out your fib tool, and anything below the 50% level in a buy opportunity, anything below 50% is going to be a discounted price, right? Anything above is a premium price. So if you're looking to buy something, are you going to be looking to buy something at a premium or a discount? When I buy things, I try to buy things at a discount, right? Because I'm cheap. I want to get things for half off as possibly, right? I want to get things. I want to get things at the best price. Especially if it's an investment, you want to get an investment at a discount, right? So anything below the 50% level for me is discounted territory. So if I ever want to look for an opportunity, I'm going to be looking for an opportunity in a discounted level. Anything above the 50%, that's trying to buy at a premium, and that's what I don't do. Okay? Now the flip side is if we're in the downtrend, same thing, you want to find an impulsive move. You wait for the correction, right? And when we have that correction, same thing. Use your fibs to figure out the 50% level or the halfway mark. Now for a sell opportunity, anything above the 50 is considered a discount, right? Anything below the 50 is considered selling at a premium, right? Because if I'm trying to sell or selling at a discount, right? If I'm trying to sell something now, I'm going to sell it at a premium, right? So anything above the 50 in a sell is selling it at a premium. Anything below the 50 during a sell is selling it at a discount. I'm not going to be selling nothing at a discount, right? I'm all about my money, family. I'm all about my money, right? So I'm going to be selling it at a premium so I can make money off it, right? But that's pretty much what discounted versus premium levels truly are, right? How to utilize it. Let's see, what are your entry strategy in a discount, right? Same thing I typically use. You can either use the moving averages to help you identify an entry by seeing rejections of the moving average. What you also can see is some type of a liquidity grab and a shift in structure, right? There's a lot of different things, right? Again, I'm going to create a video, guys, that goes more in depth on all that stuff, right? Entries, moving averages, all these things, right? Premium versus discounted levels. We're going to do all that, right? So the time frame that I actually take trades on, though, is typically 15-minute and 5-minute time frames is where I actually take trades. But I like to get a bigger perspective, though, on the higher time frame, right? So I analyze the weekly, the daily, the 4-hour, but I enter on the 15-minute and the 5-minute. Thanks for the vibe, fam. I love the fam. Thanks for your stream. It feels good to be around other traders. Thanks for your time. It is inspiring. I appreciate that as well, right? But family, that's going to be it for tonight. Once again, another fire session, right? We're pretty much on here for another 2-hour stream. And like I said, it goes by so fast because this is something that I truly enjoy doing. It's truly providing you guys with value. And you guys are always coming with the sauce and coming with the heat with questions as well. And it just makes the time go by so much faster. So I look forward to continue providing you guys with massive value. I look forward to really being somebody that you guys can come to. I look forward to this channel being something that you guys can continue to come back to and really just get a lot of value from. And if you guys want to get a little bit more hands-on help, you know, outside of the streams, you know, I do have a private Telegram, you know, for my inner circle. The way that you can actually be a part of my inner circle, guys, is by literally just going right to this channel and clicking on the join button that's next to the actual subscribe button. And you can actually go ahead and get one of the memberships, which are very cheap. Like the cheapest one is $5, right? $4.99 a month, right? You get a membership from this channel, and I add you into my YouTube or into my Telegram chat so you can go ahead and we can have a lot more conversations outside of this stream. And it's something that I really, really encourage you guys to be a part of because we talk a lot of good stuff in there, guys. We provide a lot of value. And also, I do have a free public Telegram, as well, right? That every single one of you guys should be a part of, right? Because in that Telegram, guys, I provide massive value. And that's also where I give you guys heads up on every single thing that I do, right? So please go ahead and also subscribe to my Telegram, right? The link is in the bio down below. And I look forward to really continue to provide you guys with massive value and continue to really helping you guys take things up a completely different level, right? So my Telegram is right there, family. I just dropped it in the chat. Make sure to go ahead and subscribe. Make sure to be a part of it. Just so that you guys are aware of every single video that I drop, and just every single update, every single form of sauce and value that I provide is all going to be right there, right? So family, I appreciate y'all. I love you guys. Thank you guys for rocking with me, and I'll be back next week on Tuesday with more live streams, but I will be back tomorrow with a whole new banger, breaking down moving averages, breaking down entries, and all that good stuff. So family, I appreciate y'all. I love you guys. Thank you guys for rocking with me. And I'll see you guys all next week. Let's get it. Have a great night, y'all.